Today's the 6th of December. In this video I'm going to be going over the commodities, just looking at the daily time frame of all of these. The first one I'm looking at is natural gas futures, and we're breaking out of this downtrend that we've had ever since January of this year. That's this purple line, as you can see. We're above all the moving averages, and we just recently consolidated above the 200-day moving average, and it's now starting to turn up. What's going to happen is, if we continue to go up, which it looks like we will, the 200 is going to then turn up. And now we have an ascending 5-day moving average. Also, the PPS is telling us that it's a good time to buy. So the next level we're going to look for is this 5 even level. Next, we're looking at gold futures, and you guys pretty much know where I stand on this. We still have an uptrend. We still have continued buying, and this is the most bullish chart that I've seen in a long time. We continue to make higher highs and lower highs. Look at this, guys. And just today we broke out on a higher high. So this thing could easily push back up to 1435 to 1450 over the next 2 weeks, and then maybe consolidate and move down and put in another higher low around this 1375 level. Looking at corn futures, and the high of the year is at 605. We pulled down to the September highs around this 522 level, and then they bought that up, so there was a lot of demand down here. Now it looks like the chart is pretty much bullish, so the next level is going to be the November high, or I'm sorry, the October high, which was 588. Soybean futures look poised to pop as long as we hold over this 1291 level, and that's the high dating back from April of 2009. Here's a daily time frame, and here's that line drawn all the way across. And like I said, if we hold over this 1291, then we're going to continue to go higher and test that 1348. Wheat futures are really breaking out here. When we came down, a lot of people got bearish and they got trapped. See this line right here? Well, this is 677. It's a price level that I have drawn off a weekly time frame, and it connects, and you see we've traded off it quite a few times here, and every time it seems that the demand is much more prevalent than the supply, and that's what causes us to go up. Now this is where it gets interesting. A lot of people were anticipating to move back down to the 200-day moving average, but what happened? They came in there and they bought it right up, and now we're very bullish. And you see this big bar right here. Whenever you see a big bar, whether it's up or down, you must take note that this is institutional buying or selling, but in this case it's buying. And then after that, you've seen some nice follow through, pushing, making higher highs each day, including today. So if you do trade wheat futures, then you might want to look to set your alert over today's high. Now it's a little smaller candle, and we've had a lot of upside momentum, so we could have a little consolidation before the move back up to 868. Sugar, just another chart that has a bullish chart on it, and you saw it come down to these levels when we had a lot of demand between the 25 and 27 level that was bought aggressively. We're now above the 5 and 20-day moving average with an ascending 5-day moving average. Also, as you can see, the PPS indicator is giving us a buy signal. So the next level we're going to look for is the February high, which is around 3040, to be approached on sugar. Looking at cocoa futures right here, and they are breaking out. We have this downtrend dating back all the way of January of earlier in this year, and that's a purple line, as you can see right here. Then we came, and we've just been consolidating pretty much in this area, but when we broke above the 200-day moving average on Thursday, it got some follow through today. So Thursday and Friday of last week were on increasing volume, which caused us to push through this. So I think there could be some consolidation in cocoa futures over the next few days, and a potential move back up to this supply area around 3250. Cotton futures had an amazing move last week. Now we got a little selling coming in. That could be expected after a huge move like this. And you see the 50-day moving average. After we got over that, just more people started pouring money into this. We closed at 129.63 today, and that's above the 20-day moving average, which is at 128.41. So if we could hold that level, 128.41, I think that we could consolidate higher. And there's a good chance by April of next year, this 157 will be approached again. Coffee futures look like they're ready to bust out again. We consolidated above this high of 198.65 that we put in September, and now we got some buying, and we got also a buy indicator on the PPS today. Over the last couple days, you can see increasing volume each of the last 3 days, which is also a good sign. Tomorrow could be the one move that gets us over this uptrend that we have right here and get a close over that to retest the 218 high. A lot of times when you can also use coffee to gauge, kind of like some coffee shops like Starbucks, Dunkin' Donuts, because these companies actually have warehouses where they'll buy coffee when it's at a lower price, and they'll stockpile it if they think it's going to move higher, so they could try to add more money to their balance sheets by doing that and increase the profit of their company. Now we're looking at lean hog, and when we gapped up from 70 all the way to around 77, we tested this downtrend, and then we've sold off since then. So we're going to look to hold this 74.05 level or 74.09 of lean hog for a move higher. But as you can see, that downtrend that did occur was right here where the 200-day moving average was. So it shows there's a lot of supply in the area, and the gap might have been some kind of shortage, if you were wondering what that was. Live cattle, also another big gap in live cattle. The next level we're going to look to approach would be on a weekly time frame, and that is the 109.20, and that was July of 2009's high. So the chart's still looking pretty bullish here. Taking a look at orange juice right here, and you see we've had some massive buying over the last week. Today we had about 4 times the normal volume traded, and we poked our head above the September high of 165.70. If we get a hold above that tomorrow, I think that coffee could move higher over the 170 to 180 level. I'm sorry, this is orange juice, guys. So orange juice looks very bullish. Looking at feeder cattle right here, and 117.87 is the level we need to hold above, and that's the April high for us to make another move and break out of the 120.17, which we put in last week. Oats futures, another chart that looks very bullish. You see this uptrend right here that's still intact, and we've consolidated around it. Since then, we've got above the 50 and the 20-day moving average with an ascending 5 and a buy in the PPS. With a hold above 368.51, we're going to look to retest 388, and that's our next supply level. Last one I'm looking at is Random Length Lumber /LBS, and this thing also had a gap up, and ever since then they sold it and they faded the entire gap. Now we're at the 200-day moving average. If we break below that, we're going to have to hold this 240.50 level. It's very essential that we do that, and then if we could get some demand buying, we're going to relook to get over the 200-day moving average. That's all I have for you here, guys. I'll do another update next week.